Thank you, and thank you everybody for being here. So I started my trip in investments back in 1990, basically as an analyst. That was the way that we were starting at the time. And I spent some 23 to 25 years of my career into asset management and mutual funds, mainly in the very basic and very boring assets. But it was a very important, let's say, experience in what is investing all about. And one of our discussion will be how we can apply this kind of principles into today's world.
Thank you. Do I need a mic?
Yeah, all right. My name is Jimmy. I'm actually only trading crypto for around 2.5 years now. I used to work at a startup, software for retailers, and I just saw the opportunity for like total self-education to get into crypto, and I decided like around 8 months ago to work out a six-month plan to become a full-time trader. So that's what I'm doing right now, and yeah, I'm really enjoying being in the space and continuing this journey.
Hello everyone, thank you for coming today. My journey through trading started around 2008, 2009 when I first discovered Forex. I've been trading Forex ever since, stocks and also commodities like gold and silver. But in the last 2 years, I've discovered, let's say, the crypto trading sphere. And ever since, I have been moving slowly into the crypto world, and I have been leaving behind the foreign exchange world. And one of the things that we need to remember is that the same principles of fear and greed that apply in other markets, the same apply in crypto. However, there are some differences between the crypto sphere and other traditional investments. And we would like to talk a little bit more about that today.
Great, thank you. Can tell us, because becoming a trader is a very, it seems easy and it seems great, but it's actually a very difficult and a very dangerous decision. So what kind of gave you all the appetite to become an investor or become a trader and have this risk appetite to begin with?
Well, let me first of all tell you that I fully agree. It's a kind of dangerous arena. My main interest started from the fact that I was in the markets, and as a result, I spent a lot of time to understand how markets move, what are the participants expect from the markets themselves, and of course, the underlying all of the time is how we can make money out of it. Now, being a value investor means nothing more than trading in the long term or for the long term. In other words, you try to buy at the lowest possible valuation an asset and stay with it for as long as the valuation remains at the time.
What kind of window do you typically trade or invest in? What is your typical trade duration?
Okay, I would say out of experience is something between 6 months and 18 months. But let me tell you that whenever I open a trade, I have 3 prices. The price that the trade is opened, the price that I would like to exit, that is my target profit, and my stop loss. If I don't have 3 prices, I never enter the trade.
So you enter with risk managed in mind?
Absolutely. Otherwise you go along with the flow, and the flow just gets you to the rocks.
Indeed. Thank you, Doctor. Jim, what made you? You're a self-educated trader. You don't come from an institutional background.
No, definitely not.
You came from, you were born into crypto, so to speak. And what kind of gave you the inertia to risk your own money, to leave your day job and make a career out of this?
Yeah, well, like most traders who are successful, there's a big factor of luck involved. Like myself, to be totally honest, I had like my holiday pay, and I just put in like a few thousand euros at the time when Bitcoin was around $1,100–1,200. And I was like a stupid young boy, had no clue about charts. I've never seen a chart, so I only bought what was low. So So I bought like on Kraken, I bought Ripple, I bought stuff. And then the market went off insane.
This was maybe 2017?
April 2000, yeah. April 17. And I knew I was lucky. It wasn't skill, it was just being at the right moment. But what I did do is I just dedicated like all of my time. I finally had a chance. Okay, I wasn't happy with my life. I said, okay, I'm gonna reserve all my time, tell my girlfriend she will see me less often. I will tell my friends I will not go for spare ribs on Thursday night because I will be at home. Because the market, especially crypto, it doesn't sleep.
Doesn't stop, yeah, even on weekends. It's like
Exactly.
Forex closes on weekends,
Yeah.
crypto just continues.
And at the time, that took a whole jump. At one time, I had very difficulties on my day job with concentrating. You know, you were like working for a job with a function you don't really like, and at the same time you see your portfolio growing and growing. And at one time, I told myself, okay, you need to make a plan in order to go full time. So I went full time last September. It was a horrible time. I mean,
Yeah, it was bear market, right?
I just stated before, I'm not the best trader. I mean, I lost like almost like 70% of what I had. But it was calculated loss because I had enough profit set aside to pursue my dream and to be independent and develop my skills to be prepared for a possible second bull run in my lifetime, because it's definitely not the first bull run, of course.
Yeah, and then as I asked Dr. Theodore, what is your typical time frame for a trade? What is your typical duration of entering and exiting one trade, Jim?
Yeah. I have my portfolio divided in different portfolies. So I have like one portfolio that's around 25% of my portfolio is day trade to max a week hold. And then I move them over to more liquid positions with a bigger market cap. So mostly what I'm doing all day long is like really research and placing bets on really small projects with even 100 or 300,000 market cap in order to take those gains and put them in more trustworthy projects like Bitcoin or Ethereum.
Yeah. Okay. And George, how did you decide to? Of course, we know you've got a forex and an equities background, but still, you know, what gave you the inertia to risk a little bit of your own money and enter this game? And also, how long do you spend in a trade?
Yeah. Well, it's been, let's say, a little bit longer that I've been into Bitcoin. I had some Bitcoins over at Mt. Gox that were lost forever. In any case, over this period of, let's say, the last few years, I've gained a lot of experience in the matter. When it comes to deciding as far as your trading time frame, you need to consider a few factors. For me personally, if I am day trading, I'm using a margin account. I close my positions within the day. However, if I am trading perhaps some altcoins, if I see that I have a satisfactory profit, I would most likely close half of my position and let the half of the position to run after I receive my initial capital.
Within the day? So intraday, you'll take a profit?
No, intraday, if possible, yes. Like yesterday, if you have invested, I don't know, in EOS, then you would have made 24% profit in one day.
Which is amazing compared to traditional
markets. Which is amazing
markets.
comparative to other traditional markets. So in essence, it all comes down to, let's say, your risk profile, how much you're willing to lose in the end of the day, and what are your investment targets. For myself personally, I have diversified my portfolio in the same way that I have diversified my trading strategies. So I do apply some algorithm trading, I do apply some margin trading, I also apply some value investing. It all comes down to the specifics of the token and, of course, the price. And, of course, the circumstances of the market.
Yeah, of course. So you see, everybody, they manage risk from the point that they enter their position. And this is a big difference between a professional and an amateur. An amateur, a lot of times, you know, they enter a position, they might get lucky, it might profit, and they might watch it come back to their entry and even go beneath. But cutting your losses and having a program for how to manage not just profit but also manage risk is really important. Now, I'd like to get your insight as to, in the current market, right? We had this bear market from January 2018, and now we sort of have, let's say it looks like perhaps there is a bottoming. Altcoins are starting to move again, especially compared to Bitcoin. How can somebody new to cryptocurrency trading or investing approach this market today?
Okay, thank you for the question, and let me tell you that I come from Greece, so have experienced a huge bear market for the past 10 years. So everything actually went down between 70 and 90%. And one thing that value investors like about bear markets is that you get something with a value at a very minimum, or in a sense, what other people believe has no value at all. So I think it's the best way, the best period in time for a new investor in this crypto space to enter the market and start accepting some risk in this market for two reasons. The first one is that now we know that more participants are interested about the market itself. Some 3 or 4 years ago, the crypto space was, let's say, out of the woods, and for a few people, not many people were interested to understand what is happening there. And a lot of negative publicity was also...
Drug money, the dark web, and yeah.
Absolutely, absolutely. Well, so now we have more and more participants. One of our speakers just said a few minutes ago that their grandma started to talk about the crypto space when the markets went crazy. Actually, I think it was talking about your grandma, talking about the cryptocurrency.
Your grandmother, yeah.
So now the second reason has to do with the risk element. Now that the prices have lost already some 70, 80, 90%, it is even better to start understanding the mechanics that drives prices up and down. And just to say a very important mechanic out of it, it's demand and supply. When demand is higher than supply, prices go up. When supply is higher than demand, prices go down. And when fear enters the market, then supply goes outrageous.
Yeah. Excellent. So they can sort of start feeling the market, even though it's a bear market, getting used to putting a little bit of risk on and seeing how things move.
And it's a great opportunity to start reading about it. Investments needs a lot of reading. It doesn't take degrees or PhDs from a university, but it takes a lot of reading to understand how the markets work.
Research, great. Jim, what is a good way for somebody brand new, you know, if they want to start getting a little bit involved? What would your advice be to them today?
Well, I think crypto, especially trading crypto, is one of the most scariest places to enter if you are uneducated. I mean, I've made not all the mistakes, but most of the mistakes that you can make, I made them, and they're horrible. And there will probably more to come. But my advice would be, if you have no exposure in crypto, first invest in or like buy some Bitcoin or Ethereum, and just see for a few weeks how it goes. Try to understand what volume means, what market cap means. Because I see too many people get lured in by like these unknown coins saying they are the new Bitcoin. And for instance...
Like very small cap
Yeah,
coins,
exactly.
Yeah.
And the problem thing, why I'm speaking about volume and market cap, if you go look on websites and so what is the price of coin XYZ? Oh, the price is $1, and people have like 10,000 coins in their portfolio. So they see, oh, I have $10,000. But if they actually check the volume, they see there's only a trading volume per day of $100.
They can't exit.
So,
they can't exit
first
with that.
understand like the basic metrics and have some exposure. and also make your plan beforehand. Just a small example. A good friend of mine, when the bull started to run and he had like a lot of money for his first trading year, he was like making plans because he didn't own a car, what car to buy. And he was sending like every week, oh, now I want to buy this car, and I want to buy this car. And the car
And
became
the portfolio
nicer.
was growing.
But in the end, it moved over and he didn't have a car.
Yeah.
So my advice would be, you know, make your plans, write them down before you make a trade. That's when I make a trade, I want to know what I want to achieve with it before I push the buy button.
So like a trading journal and a trading plan for every trade that you will enter. Yeah,
because you get way too easily emotionally attached to a position if you did not define your goals beforehand.
Thank you, Jim. George, I'd like you to comment with your background, perhaps for somebody new to this, how can they introduce themselves to some technical analysis?
Well, I wouldn't say that technical analysis is the way to go when it comes to crypto trading. And the reason is that the markets are so thin right now from a liquidity side that technical analysis might not apply. Meaning that your stocks might be chased by brokers, meaning also that the liquidity that we see on the exchanges, most of it might be fake by trading robots.
You can get slipped.
You can get slipped, of course. My advice to people is first to invest in knowledge and then to invest in anything else.
Yep.
They need to understand how they can safeguard their coins. Don't keep any coins on the exchange. Exchanges are centralized points of attack, and your coins might be very easily lost. I'm talking out of personal experience. I've lost a lot of coins on exchanges.
Yeah, Mt.
So
Gox.
at the moment, I'm not holding, I hold very small amounts on exchanges. Very important is for people to take care of the security of their tokens, of their assets, and understand what they're doing, understand the fundamentals behind crypto trading, understand also that not all the promises that we hear online are real. We need to do very good diligence, especially when we're talking about altcoins and coins that are not Bitcoin or Ethereum, let's say, that are the most prominent open blockchains right now. So technical analysis can work up to a point, but we need to invest more in knowledge rather than gambling our money on crypto. 2017 was a beautiful year for a lot of people. People made a lot of money, but in the end, whatever comes up needs to come down.
Yeah, of course, this is
and
the
this
way
is what
markets
we have
work.
seen last year.
That actually, it opens up a really nice question. So you advise that it's not a good idea to leave money on exchanges.
Not at all.
And I agree with that to an extent, but perhaps if you have all your money in your cold storage, in your paper wallet or your hardware wallet, you know, a lot of times you can lose opportunities. So what is a good way to kind of have access to opportunities but also safeguard your assets?
Well, if you want to take advantage of opportunities, perhaps you can have a small amount of funds within a margin trading account, perhaps, so you can trade with leverage with a small amount when you're sure, so you can take advantage of that opportunity. On the other hand, you also have decentralized exchanges, which you can use your hardware wallet to connect and exchange peer-to-peer.
Yeah.
So there's your answer there. If you want to use decentralized exchanges, you remove the fear, or let's say the risk, of having our tokens within a centralized point of attack.
Sure. Gentlemen, do you have anything to add to that? Perhaps how to keep your funds safe, and you know, if there's a good balance?
Okay, just one thing. In the very boring fiat world, what we use is the custodians. Custodians are the intermediaries between the exchanges and the fund or the private investor. So the same idea will be created. I'm sure it may take another 3 years or 5 years, it will be created. Now, as long as we don't have a certified organization to be the intermediary, then as George said, we need to safeguard our coins ourselves.
Well, if I may comment on that, I believe that is the future. We will have specific regulation and guidelines as far as the standards of exchanges. And this is something that I really hope to see in the future in order to protect the investors and also be able to make this industry a little bit more healthy for people to have a little bit more trust in it. Right now, people see it with a negative eye, but of course we're trying to change that right now.
And these, I believe these are all things that are being addressed. You know, we see Backed will come online, Fidelity will come online. Okay, I believe there'll be a minimum amount that you will need to trade there. However, you know that your money will be secured. And also, you spoke about, you know, volumes, if they're fake, if they're real. Nasdaq has made a tool that it detects spoofing. It's very expensive. But, you know, slowly, the architecture is going to get to where it needs to be. Because I agree with you that exchanges they're a long way behind. Like if you've traded other assets on a real broker, you know that the infrastructure is so much better. And that's where we have to get. Closing thoughts, George.
Closing thoughts. I believe that we have been over the worst. I want to believe that. It's my personal opinion. Again, this is not a financial advice in any case. We see that the market right now is turning green. There's the FOMO effect, the fear of missing out, some like to say. And I'm hoping that this will continue and that let's say the bear winter has come eventually to an end. This is my, let's say, message to the people here. I hope that we really see some positive developments in the sphere, not only price-wise, but actually we will see all these various actions taken place by various financial institutions around the world to actually show some results. And this will also be reflected in the price. This is my hopes.
Thank you, George. Jim, closing thoughts.
Well, about the market sentiment changing, I kind of agree. A lot of my close friends who aren't in crypto who ask me about Bitcoin, should I enter around 20K, who didn't, they are again asking, hey, I see some more exposure. Even in my own country, in the Netherlands, there are crypto commercials on prime time
Actually, hear that on radio. You
Sorry?
have Bitcoin commercials on the radio in Holland.
Yeah, also on television. So something is happening, but also. The last thing I want to add, last Christmas, my younger sister and brother, they saw me trading and everything going up. They wanted to put their own hard-earned money into crypto to start trading. And I advise against it. And I gave them some Bitcoin as a present for Christmas. Because I don't want to have my brother and sister the amount of stress some of the traders experience.
Sure.
Because it's more than a full-time job. It adds a lot of pressure on your personal life, and especially if you have your hopes up too high, you will get crushed.
Yeah. Doctor.
My 5 cents in this is the following: when in an asset you don't have enough history. You don't know how it performed the previous 10, 20, 50 years, then one should expect volatility. So what we have experienced is a great volatility because a lot of demand was created, newcomers entered the market. We have 2 very experienced traders here. Both of them said that the market is low, so I go along with them. But we should expect volatility, and the only way to control volatility is to know at what point you get out, one way or another. Either you win or you lose, you need to get out. This is the only way to control volatility.
I agree. Solid, very, very solid advice there. So you see, we've got 3 traders that are each very different in their own right. They're 3 profitable traders with a lot of years experience between themselves. If you'd like to ask them some questions, I'm sure they will enjoy after the panel. Thank you so much for being here today.